The internet is freaking out as markets are crashing right now, and I'm going to bring the calm to the chaos. I'm going to tell you exactly what's causing this market to crash and what you need to be looking for next. And I'll tell you right now, you better subscribe to the YouTube channel and like the video, because if you've been following my YouTube, you have been prepared for this. You have been looking for the further downside. We have taken a moment to pause, and at the end of last week, if you're a member of the Discord, you are already prepared for what is likely to happen tomorrow. You've already been making money. This is one of the greatest moments for me, someone who's supposed to serve as a navigator for what to look for ahead, all the potentials that we could see. And everyone in the Discord is super active right now. They're all happy, they're all excited, and that's an amazing spot to be when the market is crashing. We rode things all the way up, we then rode them down, and it's such an amazing spot to be. But let's break this down. Okay, let's start with Friday, where everyone was saying that the market was already crashing on Friday. If you follow me on any of the socials, I was telling you that that is not the crash. All right, even on Facebook, I was saying today was not a stock market crash. Okay, that was laughable. What you need to be watching is the Japanese markets that have had the worst 2 days since the COVID crash. Okay, and what this happens in these events is that lots of US institutions and hedge funds are engaging in over leveraged pair trades that share relationship with the US market and the Japanese market. And right now, they're blowing up catastrophically. And the first victim of a blowup was Ethereum, which just tanked 20%. Now, we haven't been talking about Ethereum in particular a lot, but we have been talking about Bitcoin. And we've been following this channel on Bitcoin. This is about to break. And what I would be looking for right now is for this bottom level around 48,000 to get tested next. Although, be aware that there's some really bullish catalysts coming up for Bitcoin in particular, but we'll talk about that later. Right now, what has my attention is TLT. If you've been following me, we've been in the TLT trade, both in the trade accounts and in the long-term accounts as a hedge. And this broke out of a multi-year wedge right here. Beautiful breakout of the wedge. Now, the most bullish outcome, there's two outcomes that could happen here that I broke down in the Discord for members, okay? We had the super bullish outcome that would probably correlate with a market crash. Don't mind these. These are notes that I added during a live stream. We were talking about what some could be some negative catalyst in 2025 for these, long-term positions, that macro positions that we have on. But right now, we're focused on what's coming next. So what's coming next could be this potential where we have this, going to 108. We kind of have a breakout of the trend, extends a little bit further, comes and tests the wedge, and then bounces back up. Now, we do also have the crash outcome where this ends up being a wave 1, 2, and then 3. We actually go to the 618, 1.618, and go to 120. That is another likely outcome. Bonds are usually catch spikes into crashes like these. They can have temporary selling with the broader market. Okay, so look at the market tomorrow. Are the minerals holding up well? Is the Dow holding up pretty well? Or is it a sell-all event? If it's a sell-all event, look for bonds to have this type of parabolic move, and they could go even higher. Now, if a crash does come tomorrow, and keep in mind, this is the highest likelihood of a crash that we've had in years. Okay, that's happening right now and could come tomorrow. All right. So this is the most important time to talk about this, okay? We have to remember our circuit breaker rules, okay? Level 1 is triggered by a 7% decline in the S&P from the previous day's close, okay? So if we're down another 7% from Friday, that means they'll halt the market for 15 minutes, okay? If there's a 13% decline, okay? If we drop another 6% from there, there'll be another 15-minute halt, okay? If we drop 20%, and the S&P 500, which hasn't happened, didn't even happen during the COVID crash, they will close the market for the rest of the day. Now let's take a look at the SPY. If you've been following me, I've been talking about how this rally that we saw last week could just be a B-wave bounce and that you need to be cautious. We actually came in and shorted this, and I bought some 527 puts, and I've shared that with Discord members because I was looking for an A BC. The C extension would bring us to 527, but I thought at the time that it could be an ABC to the downside before we saw that. Instead, we saw an immediate meltdown. And on Friday, near the lows, I actually closed my SPY puts because, hey, close enough. I don't treat this like an exact science. If I'm up over 200% and we're $1 away from my target, I'm going to be closing my position. I'm going to be taking the risk off, and I'm going to see how the market reacts at the test. Now, given what we're seeing over the weekend, this might turn into a further extension down to the downside, where we would look for a 618 extension to 511, or if we actually take a look at like the hourly chart right here, we can actually see that a pretty key level for the market is around 509. Okay, we could probably even move this up just slightly to 510, right? So either way, it's around the same target that this market could find support. Now, if we do go down there, we're likely in a full-blown bear market, okay? Party's over for the bulls. At which case, if we get worst case scenario, we go into recession, maybe there's some geopolitical issues. Keep in mind, we've had some assassinations in the Middle East, and that's caused some geopolitical turmoil. We have, this uncertainty with what is Kamala going to bring to the economy, and she's looking like she's doing better in the polls against Trump. He's a little bit more of a known factor probably for the market. The market's dealt with Trump before. They're not really sure what Kamala's going to bring, especially since she's been kind of reversing a lot of her policies. So what does she actually stand for? That uncertainty alone is the market doesn't like that, okay? And I don't have a political stance. I don't ever get political on this YouTube channel. I'm simply telling you how the market's going to handle this based off historical references that we can make, okay? When the incumbent loses, the market on these election years is nowhere near as bullish as it is usually, okay? So that's the data I'm inputting when I'm talking about the probabilities for the outcomes that we could see in the future. Now, if I clear out some of the flips, we can kind of see more clearly on the chart what we're looking for, right? This could still be a bull market at this point, okay? We haven't even come and tested this major EMA on the weekly chart, okay? We won't be technically in a bear market till we break through that, okay? At that point, it's short all bounces. And even now, I'm still kind of in short the bounce mode, okay? This looks extremely weak to me. Everything that we're seeing when we're seeing the Japanese markets blow up, that to me is a huge red flag that we need to stay short, and we also should be cautious about the volatility picking up, okay? We could have an '08 situation come around where we have big like 5% down days, 5% up the next day, 7% down the day after that. Okay, we could see the bulls and the bears really start fighting it out, but overall I still like being short right now. We can see the weekly starting to break down, and the daily's already been printing to the downside. We can see it's about to be one of the larger sell-offs probably tomorrow that we've seen for all of 2024. We've only had one major retracement in the market on the daily chart right here, and we can see it's already deeper than it has been in the past. And we can see that we've also completed a 5-wave pattern potential here. So this larger ABC can go a lot deeper, okay? If we actually pull from the top of the 5th wave down to the 1st wave, which would be down here, we could actually see that 480, maybe even 470 at the 618 is a potential in the cards that you need to be aware of. And that could then turn around in 2025 and turn into another bull market after, let's say, something like a recession, keeping in mind that the economic data does pretty much point to a recession, which is one of the reasons why this market is reacting the way that it is. Okay, that you need to keep in mind that there's 3 things that are really coming together to create this. And I typed this out in the Discord for members today, that we had earnings weakness. Okay, at most we probably only have one more quarter of strength, and that's what was being indicated by these earnings reports. We had the geopolitical uncertainty, the Japanese markets crashing, and then the Fed hard crash is now back on the table. Many people are saying that they made a mistake. In my opinion, it's hard to say they made a mistake, right? They're trying to follow the data. The Fed is always going to be reactionary. They're not going to be proactive, and they have to be worried that if they did pivot too early, started cutting rates, that they would bring inflation back, and that to them would be a worse outcome as it destroys their reputations. And these guys, they're all old at this point. Jerome Powell's old at this point. He's trying to defend a legacy, right? So he's trying to defend that. If he comes in, he can still be the hero that tries to save the market. But remember, historically, cuts are just bounces, not bottoms. So the Fed tries to come in and save the market, and you think, oh, this is bottom. '08 would tell you, 2000 would tell you that when the Fed starts whipping out the emergency cuts, more lows are on the way. Now, of course, I want to remind you that in the Discord, I'm sharing all my trades in real time. I am available trading live. You could talk to me while the market's open. So click the link down in the bio if you want to join and become a member there. And so the last thing I want to talk about for this YouTube video, though, is Tesla. I have an outsized Tesla position. We've been covering it every week. And I just want to point out right now that I am in puts defending it, that I will be carrying those puts into this week. And the number one thing that we need to be watching is that if we still are in this five wave pattern, okay, this fourth wave can retrace this deep. It is deeper than I expected. Okay, I thought right here we might have seen the short-term bottom and we were going to bounce to 300. It ended up breaking out of this channel that I was looking for and crashing further to the downside. Now this can crash all the way. Let's just go ahead and clear this out, because what you're watching right now is, will this break 199? Okay, a fourth wave cannot retrace into the extension of the first wave, or it invalidates the entire charting. Very simple thing to watch. Okay, if this crashes below this 199, it will invalidate my charting. Remember, it has to close on the day below it. Okay, so it can't just intraday get below that and then recover it. Okay, that will invalidate my charting, and that will start to make me rethink how I'm going to keep my positioning in this stock. I still think that Tesla has great fundamentals, some of the best fundamentals. Remember, if we go into a major recession, it's also going to be a catalyst for a lot of the fundamentals that Tesla has, especially when it comes to Optimus robots and when it comes to self-driving, the AI story there for Tesla, right? So keep that in mind. All right, keep it on the top of the mind. And the last thing I want to mention about Tesla that I would say is a small probability, but something that's worth mentioning, if there is a major war, because this economic turmoil can lead to further geopolitical conflict, and we already have a nasty brew going, okay, that would probably be a huge driver for Optimus robots, for us to pick up the timeline on production and pick up the timeline on their usage for a time of war. I just can't help but think that that might be something that happens. I don't know what kind of, percentage to put on that, but it's worth mentioning. And that's going to be it for this week report. I will be doing some live spaces on X, so make sure you check me out there. I'll probably be live on there actually on Monday morning and Tuesday morning. And then I'll probably do a live stream on Wednesday from open to close. So make sure you're following the YouTube, you ring the bell. And remember, if you want the all access to everything I'm doing, the live commentary, check out the link down below to join the Discord with all the other traders there who are super pumped. And God bless. Good luck on this week.